Why does a credit card with a $0 annual fee demand an $80,000 personal income? Thinking face. It sounds counterintuitive, right? The Rogers World Elite MasterCard is one of Canada's most popular no-fee cash-back cards, offering a fantastic 3% cash back on US dollar purchases and strong base rates. But to get it, you need to prove an $80,000 personal income or $150,000 household income. It's a steep hurdle, especially for a free card. Today, we're breaking down the real reasons behind that high income requirement. It's not just about Rogers, it's about the entire World Elite platform and how banks protect themselves while delivering premium value. 1. Risk mitigation and credit limits. The first, and most important, reason is risk mitigation. Credit cards in the World Elite tier, regardless of the annual fee, come with certain expectations. They are designed for high-spending individuals and, crucially, are often issued with higher credit limits right out of the gate. For a bank, a higher credit limit means higher potential exposure to default. By setting a strict $80,000 minimum, Rogers Bank is ensuring that the cardholder has the proven financial capacity to handle a large credit limit and make consistent payments. This requirement reduces the bank's risk exposure, allowing them to offer such a generous, no-fee product to a financially stable segment of the market. 2. The cost of premium perks. The second reason is the cost of the perks, specifically, the insurance and travel benefits. The World Elite designation is a MasterCard branding tier. It means the card is loaded with built-in, premium features that cost the issuer money, even if they're free to you. This includes out-of-province/country emergency medical insurance. This is a major perk and a significant cost. Trip interruption and cancellation insurance. Again, high value, high cost to the issuer. Rental car collision/damage waiver, a feature you typically pay for. How does the bank pay for all that free insurance? Through the interchange fee. Whenever you use your credit card, the merchant pays a small fee to the bank. Premium cards like World Elite have higher interchange fees than a standard card. The bank is essentially using that higher merchant revenue, driven by a high-spending customer, to offset the cost of the insurance and the generous cash-back rewards. The income requirement is their way of selecting customers who are most likely to generate enough spending to make the math work. 3. Maintaining the elite barrier. Finally, there's a marketing and structural reason, maintaining the tier barrier. The Canadian credit card market is structured into tiers: Standard, Gold, Platinum, and World Elite/Visa Infinite. The income requirements, $60K for Visa Infinite/World Elite, and then $80,000 for specific elite versions like the Rogers card, are there to keep these categories distinct. If everyone could get the Rogers World Elite, it would devalue the entire World Elite brand for MasterCard and make it harder for other banks to charge annual fees for their own similar cards. Rogers is playing by the rules of the premium card structure. They offer a top-tier product, and in exchange for its no-fee status and high rewards, they get to be extremely selective about the customer they accept. In short, the high income requirement isn't about being exclusionary, it's a necessary financial filter. It ensures you have the income to maximize the card's generous spending-based rewards, while protecting the bank from the significant cost of the free, premium insurance benefits. With that said, thanks for watching, and until next time.